What's going on, everybody? Charles Moon with Howard Greenberg, and today we are live, only about 3 feet apart. 3 feet apart, right? Happy Halloween. And today...
Happy FOMC day, baby.
Well, Jerome Powell may have spooked the markets.
That's for sure.
Media headlines had said, Fed's gonna start possibly considering slowing down the rate of hikes, and then Powell said,
no candy for you. That's what Mr. Powell said today.
Quote unquote, he said it is too premature to think that they're going to slow it down yet. So really the initial statement and digestion of the market was that this was an extremely dovish outlook by the FOMC. And then Powell spoke and he came off quite hawkish, I would say. I think the S&P pivoted 13 points plus, right?
Right, yep.
Yeah. How was crypto at that time?
We actually held up pretty well, but we were up, you know what I mean?
Yeah.
We had moved up originally.
As did our markets?
Yeah, as did everything. And what we saw, as you know, was, that first press release came out and it talked about the lag. So people thought there was the pivot. They're talking about this lag. Yeah. They're going to pause. And, you saw that on Twitter, hit crypto Twitter hard. And then Powell got up and literally just stomped on the throat of the markets.
Yeah, right now this week, we're all kind of working together in literally one shoebox of an office. I guess we shouldn't say that, but we just moved into offices. We're generally going to just use it for filming mainly because we work from home. But at that time, our CEO, Scott, was saying straight out, he's like, guys, don't believe this yet. Don't, feed into this. Wait till Powell speaks. Sure enough.
Absolutely nailed it. He absolutely nailed it. We were in a long, right from the start, from about 15 minutes before the announcement, and closed it out at basically even because you could see it was turning. But with Bitcoin, we held up much better. I mean, again, who would have thought Bitcoin the least volatile asset class out there? I mean, I don't want you to choke. I mean, I know we did rename our podcast Dips to R.I.P. because the market died today.
Oh, man.
But, but don't choke there, Charlie. Yeah, I mean, it's rough. The market was looking, crypto market a little bit more so than even the regular, equity market has been looking at any good news to rally. We've seen it, whether it was, Dogecoin with Elon and Twitter, the news there.
Yeah, how about that, huh?
Yeah, I mean, we rode that a couple of times during the last week for sure. And, but you're seeing just people they want to. Fear and greed factor moving in crypto for the first time out of extreme fear back into a 30, 35 level.
Wow, that's actually very interesting because with equities, we've seen it climb up as well, but we've seen it get down as low as 18. Right. And you just said it best. It's like, if crypto rolls, it just goes back to where it came from and then it holds and then it just waits for the next piece of news and then it runs up. And today, Amazon, one of the most powerful and largest and biggest companies in the world, making new 52-week lows. Meta making
Tesla's right there.
Tesla, and here we are, these powerhouse companies still leaking to the downside. And like you said, imagine that the volatility is in the stock market and not in the crypto market.
Yeah, it really is. I mean, literally at one point I put in our chat, we were at 0.90 down, so less than 1%, and QQQ was over 3% down, so NASDAQ, and SPY was at like 2.6.
Right.
So
the safe haven, Bitcoin.
Safe haven and non-volatile asset. I think I would have to change the name of my room to long-term holders, long-term.
Hodler. Come on, man.
Stablecoin room.
You're the crypto guy, hodler.
Bitcoin's the stablecoin rule now.
Oh, okay, hold on. So do you think that it's a seasonality thing? Because we always hear about seasonality trading.
I think that we got our butts kicked when you guys didn't. And by that I mean, Voyager, Celsius, Voyager, Celsius, when you guys sort of just went even through, June and July, pretty much just treading water. We didn't tread any water. We drowned.
Yeah.
And that's really what happened, and I think we're seeing that. And you just have those strong support levels. Under 20, I mean, Bitcoin's holding above 20,000 right now with what's going on when the QQQ can't hold 275. We were talking a few months ago. That was we literally. I remember one of the podcasts we were talking about when you first called for 275, and we dropped down after I think it was 2 FOMCs ago.
Yeah.
When you said watch for 275 to the downside, we were below 20K with Bitcoin at that point. Now Bitcoin's at a little over
Right,
20K, and QQQ is what, a 260 something right now?
Yeah. So I know that the 260 downside, depending on when this is finished out,
Right.
is what we're looking for. There's a gap fill down there, and then shortly after, somewhere around 256 or something, 258 maybe is the 52-week lows. So it's really interesting because I think you could correct me if I'm wrong on this, but Bitcoin's previous historic highs before it rolled back prior to this bump was at 20,000 or thereabouts, depending on the exchange, right? And now if you see Bitcoin, now they're holding that threshold. So it's utilizing those old highs as support, which again, if we zoom out and look at the scale of things, that's historically very bullish for the longer term picture.
Yeah.
And we don't need to talk obviously you're the biggest believer in Bitcoin between the two of us. For me, I still don't understand it to the scale you do, but you know that I love it to the upside. You know that I believe in you, and I know that this is where the generational wealth is. So as a technical chartist, Howard and I had this discussion where he's more the fundamentalist, I'm more the see the news and then react to it and trade it, and then utilize my charts in that sense. That's a very key sign where I'm not so concerned about the downside like I am with the markets. And maybe, and not investment advice, this is where some traders and some investors can start to pivot and feel less anxiety about their money being at work, right? So, that's the key, right? Anxiety.
Absolutely, because if you're investing in Bitcoin for the long term or investing in crypto, you need to have a longer term horizon or
zoom out.
Mm-hmm. And part of that is because we're so early in the adoption curve. We're nowhere near that level of saturation where you can
it's very young.
And that's why for me it's tough to go just straight from TNA.
Yeah.
Because it's still developing. So there are changes.
That's because you're hanging around
correlations. Me, but we definitely use it on our entries, our exits,
sure.
things like that. But with crypto, you're looking at fundamental changes. So like Dogecoin went from a joke meme coin, and now there is an actual realistic chance that it becomes the underpinning payment platform for Twitter, for one of the largest social media.
Why wouldn't it be, right?
Yeah, based
it's not
on
like
Elon
the
and
owner of Twitter doesn't,
go by Dogefather.
Invested it for his, I don't know his son's name.
Yeah, good luck.
Has a little bit for himself. Yeah. Actually, Tesla accepts Doge, so why not?
Yeah, it's no joke because you've heard him talk. He's made it clear that he looks at monetization in a couple of different ways. He's talked about sharing with creators, so that's going to be microtransactions. You're not going to do that through PayPal or anything else. It's going to be a tenth of a cent or whatever else that you're getting. Number 2, he's talked about it's the answer to getting rid of bots. Again, even if it was 1/100th of a penny for a tweet. That's going to stop bots. They send millions. You know what I mean? They're not sending out, 1,000 tweets a day. They're sending out 100,000 or 1,000,000 tweets a day,
if not more.
So that becomes cost prohibitive. And we've seen this in the crypto world already. So some of the layer 2 solutions like Polygon and some of the other layer 1 blockchains that have really low transaction fees found that there was a lot of wash trading going on.
That makes a lot of sense, too.
So, people are trying to manipulate volume
and
move things because it didn't cost anything to trade. So Polygon literally changed their fee structure to make up for that and to actually put a little and said, hey, we're too cheap. You got to have some pay there or it's just there's no barrier to manipulation. So, with Twitter, the same thing. These microtransactions, it makes sense. Dogecoin is fat. It's got the transactional ability to do it.
Right.
He likes it. It's based on Bitcoin.
He doesn't just like it. In fact, it probably was just more of a speculative thing. He was joking around, but he actually dug into it, right? He met with the developers, the team. He saw exactly what was. He knows everything from basically the inside out. And you know what he said after that? I'm going to buy some more.
Yeah, no, he definitely. It's not a joke. And that's what I'm saying. So fundamental things like that. For Bitcoin, on-chain metrics still look great. Exchange volumes are down, so that means people who are buying are committed buyers. They're buying it and they're taking it off of the exchanges, putting it into their custodial wallets, their own hardware wallets. Those signs are huge. They also put you in the room for short squeeze, right? Because again, you know, you have the lowest levels almost ever of exchange value. Unfortunately, we haven't had the spot volume to do that. But it means if spot volume does return, you know, midterm elections come around, we start to get some stable coin regulations in place, and you know, you could see some huge turnarounds in a quick amount of time.
You know, it's like we should replace Jerome Powell with a guy named Elon Musk, who probably doesn't have enough hours in the day, but would gladly take on this job, specifically because he actually talks about, he talks about inflation. He gives his strongly worded opinion about the economy. You know, he doesn't sugarcoat.
I think Elon's got enough to do. I'm going with Michael Saylor if he's available.
Oh, come on, man.
He just resigned as CEO of MicroStrategy. He's got time.
I guess so. You know, I mean, I didn't expect anything. I shouldn't have expected anything less here. So where do you think this leaves us for, let's talk about the stock market first.
Sure.
Let me get your opinion, you know, because again, while you're not truly an outsider to the stock market, it's not like you study in and out every single day like I would, right? So from your perspective, what do you think today's press conference signaled, or what do you think in terms of digestion from investors and traders? How do you think they're taking Powell's comments going forward, let's say for the rest of the year? I know this is a bit of a spot question.
Well, I mean, I think that it's bad. I mean, I think it leads to more downside. You know, as you know, I've been bearish, you know, in general about the markets.
Well, I mean, we talk about housing, right?
Yeah, I mean, that's my big one. My big one that I think that there is still a huge housing bubble crash. And as I've looked into macroeconomics about that, I didn't realize housing's 20% of GDP. And like, you know, then you start to talk about the different areas that it hits. Like, you know, I knew construction workers, obviously an issue. You know, building supply, Home Depot, obviously an issue. I didn't think about mattress firm. I didn't think about Bob's Furniture.
It is.
You know, it just keeps going down the road. The Ring, you know, the alarm systems. You know, you just keep going through, and how many people it hits. And I didn't realize that, and I think we have a lot more downside there. I think that, you know, the U.S. is better positioned than other countries, but let's face it, Europe has some serious headwinds. You know, we've seen their inflation's at 20-year highs.
Do you know what an ARM is?
Yeah.
Okay, so for those that don't know, ARM stands for adjustable rate mortgage. Not always, but usually these are offered to people that don't qualify for fixed credit but want to buy a home. And, you know, under normal circumstances in our economy and with Fed policy, ARMs are perfectly fine. But again, we just saw something historic happen, something that we could never account for, right? We went from here to here, the fastest we've ever done in the history of the FOMC. So now we have to say, well, what happens when that hits home for, you know, people that have ARMs, right? And we already know that some of them already feeling the weight, but there's a lot of new homeowners from, you know, maybe mid last year to early this year who have this little grace period. Some have it at 12 months, 18 months, sometimes it's 2 years. But what happens when now they're done with that grace period? And now all of a sudden people that
and they have no equity in their homes yet.
Yeah, and they're kind of living, well, they can't refi. What are they going to refi to?
That's what I'm saying.
They're refining to the rate that they've already adjusted to. And, majority of these homes are not so much check to check, but are, you know, in a position to be able to handle a mortgage that goes from $1,500 to $3,000, which is what a lot of people are facing in these situations. So do you think that is going to have a devastating effect?
I do. In the U.S., I think the housing market's going to be really under a lot of pressure. We've also seen in some quarterly reports, right, that Citadel and BlackRock aren't buying homes like they were. And we know that they were propping prices up tremendously.
Well, I mean, BlackRock was a market.
Yeah, I mean, 68% of homes bought in that like price range of 250 to 600, which is what like the sweet spot is. They were responsible for.
Oh, yeah,
Over 68%. that buyer is sort of gone.
And it was no problem for them.
Yeah, well, and and it's like I've talked about is the difference was, my parents paid that for their mortgage, but my dad made $35,000 a year, and he bought a $45,000 home, so it was a year and a half's salary. Now you're talking about average salary, if you're lucky, 100K, let's just say to make it easy. Average home 600,000 in the U.S. So that's 6 times.
At 7.6% or higher.
Yeah, and you're about to see it go. Like they said, it's $4,000 mortgages
for a normal home.
For just an average homeowner. Yeah, that doesn't work.
And this is the problem where there's that that period where it just can't match up, right? Because if you actually applied for a mortgage, let's say 18 months ago, your buying power at a certain rate was probably pretty big or whatever it was.
At all-time highs.
And now, your buying power, like my buying power is down like 40%.
Yeah.
And it's not like we have horrible credit. We actually have really good credit,
It doesn't matter, right?
Right, no, it does not matter.
The bottom line rate is if you are a federal bank, you're paying for, as of today, what percentage rate? 5%?
And we forget how extremely powerful a company like BlackRock is. I mean, look, it was Goldman Sachs, PIMCO, BlackRock, maybe a handful of others, along with the FOMC, that basically saved the United States economy. They were the bid. They were the bid. They were the floor that came in 2008, 2009. And of course, they benefited greatly. That was the payoff. But they had the power to be able to align with the Fed and certainly provide that floor. It's a really interesting time because everybody's waiting for that shoe to really drop. I've long stated, people don't believe me, okay? But you guys got to understand, they don't believe me when I say we haven't seen capitulation in the stock market yet. If you don't know what capitulation looks like, some platforms have on demand. Go back to March of 2020 and see if your computer shuts down, like basically crashes, because honestly, it was so difficult. You and I and others, our coaches here, have extremely high power trading machines, right? And it just could not process the data. Not only was our PCs lagging, the brokers were lagging, so there's incredible latency, and people are trying to trade, and like stocks were swinging, when we would see normally maybe a 0.5% range in a 2 minute period, it was like 10% swings at times. I mean, guys, at one point the Dow was down 3,000 points in a day, NASDAQ over 1,000. I think it happened multiple times. Not like it was like every day, but I've never seen that before. And I traded through 2008. And I remember seeing capitulation in 2008, and that happened at the very tail end. When I say we haven't seen capitulation yet, this is way too controlled, way too easy, folks. And more importantly, this is more trend. This is what trend looks like, right? We see, they always talk about bear market rallies. They tend to be some of the biggest sustained rallies in the history of trading, right? 20
we just had it the other day. S&P had its largest 2-day gain in 25 years.
It's something like that. Yeah, like 12 of the top 20 rallies that we've ever seen happen in bear markets in the history of trading. And so, like, we're in this spot now where everything hinges on what 12 people have to kind of decide on. What one person who's the most prominent out of them, Mr. Chair Powell. And we as traders have to live and die by what they may or may not say. And Howard, you pointed that this market is looking like it's going to work lower. Here's why I think 100% in agreement. We had one headline, we were told another. And partly the market was somewhat frozen for a second today because they were very confused, right? And finally, they really got the gist of it. When Jerome Powell said it's too premature, when he says that he's surprised that goods inflation hasn't come down yet, these are not dovish comments by any means.
Employment has not felt the bear
No,
that they thought that
everything hasn't. Nothing has signaled A, that there's any real slowdown in inflation, and B, that there's a reason for the Fed to quote unquote pivot. Remember, this pivot talk, folks, it started with a Wall Street Journal article, and everybody ran with it. And this is where I say you have to be careful about media sensationalism. And look at how this market traded in the last 2 weeks. Extremely bullish.
Absolutely.
Legging like a staircase up. And we gave almost a full week and a half of gains back today.
Yeah,
That's
I mean,
disappointment.
without a doubt. And that's what we're going to see. That's why, again, one of the things I ask you about is, how do you trade that? We've talked about, making sure you have those stop losses.
Oh, yeah.
You're great in your rooms. I get your signals. You lay it right out. This is our first profit target.
Yeah.
This is our final profit target. Here's our stop loss. But I've also seen you're not scared to change in the middle.
No.
So if we see the market pivoting, sometimes the best trade's no trade. Just get out of there, reset in the morning. I mean, I did that today.
You can't be married to anything right now.
Yeah, I said, I don't know what's going to happen tonight. Europe is still in such flux. The good thing for me in the crypto market, China talking about loosening up their COVID restrictions has been a positive, and we've seen more buying during the Asian hours. So that's good for crypto. Hong Kong's talking about allowing for crypto trading. In fact, I'm going there next month to speak at a conference about it. So they're definitely
Congratulations, by the way.
Thank you, sir.
Did you guys hear that? That's why Howard's a legend. Got another YouTube short coming up? What's up? Can we get one that says I'm a legend at some point?
There you go. Yeah, the disciple of trend.
Yeah, listen, there's two things that I know. Number one, if you're not paying attention and the market doesn't work out in your favor, you're going to get severely punished. Let's be smart and care about our money and make sure we're at least attentive. I had to deal with a client today that said, long meta calls, thought that the market would reverse. We didn't just reverse, guys, or we didn't not reverse. Not only did we break lows, but we ended up extending by another 5, 6, 7 points.
Yeah. I mean, you would just explain turbo drop to them.
Yeah, and this is where the market could get really, really away from you. And again, there's a difference between being a disciple of trend and understanding volatility. So when we trade volatility is really the full definition of big swings up or down, tends to be unpredictable. And this is why it's more that we have to be adaptive in this market environment. We could front run some ideas, but it really truly is a guessing game. Oh, I know it's going to go up. And then it goes up. Oh, damn, I nailed it. I know it's going to go down. And then it goes up, you get crushed.
Yeah.
And the one thing that we have to understand is if you're going to trade in this environment, you have to accept that you're going to have losses. That's one key factor here. Listen, I always say it, I said it here, and I'm going to say it again. If you know a trader that's never had a loss in their career, please introduce us so we can learn, okay? But I'm sure everybody known a trader that has had a loss. So we know it's a part of the game. It's a part of the business, the cost of business. Respect that. Respect your risk, okay? And two, because of this volatility, we don't have to be in the market much.
Right.
Big moves in a short period of time. What else do you want? Oh, I want to go up even more. I'm up 15%. That's not enough. And Scott has a saying, right, about pigs and hogs getting slaughtered.
That's right.
No,
bears and bulls
Yeah.
eat, pigs get slaughtered.
Right. And for me, where I'm a trend-based trader generally, but I'm also more than willing to be contrarian at times, the biggest thing that we have to account for here is that with big reward comes big risk. And if we don't adjust, if we try to tighten up, if we try to trade in an environment where we're going smaller risk, and what I mean by smaller risk is if volatility dictates that a stock is going to move $10 to $13 up and down in one trading day, and you're trying to size in with a 20-cent stop, 50-cent stop, $1 stop, let me know something. You have to hit it perfect. And it's very rare that our trading gods will bless us with that perfect moment, regardless of the setup, regardless of the opportunity that we're presented. Generally speaking, your smallest risk is going to be contrarian style trades, either at peak values, what we would name the extremes, right? The very tippy top or the very bottoms. And quite honestly, when you're trying to be contrarian, when the market starts trending like today, you're finding it out for breadcrumbs. Today was like an example. It's like we preached that it's not good to buy at the lows unless you're looking for breakouts. And we had a breakout, and that breakout was big. And it was almost at a point where we had to kind of get in because the market was unrelenting. Unrelenting. This was not an environment that showcased any kind of bullish demand. It was non-stop, unrelenting selling. And it wasn't that big of a move, but it was one of the biggest moves this market has seen in the last month. And this is something that we have to be aware of and we have to respect. If we're going to trade in this environment, we adapt or we die. Ain't that right, sir?
Absolutely, you nailed it. I mean, without a doubt, that's why Charlie is the man, because what he just said right there, nailed it down. You have to adapt to the environment in front of you. You trade the market in front of you. The market doesn't come to you. You follow the market. For me, the same thing is looking for reversals are some of the ways that you're going to make your money right now, trying to play the continuation trade. It's not really there. We're seeing too much choppiness, like you said. Everything's chop. So for me, I'm looking and saying, okay, this looks like the lows. This has been the low of the week. This has been the low of the month. This has been historical, support. So I've got to take a chance. And when it hits it, play for the bounce back.
Yeah.
That's because, like you said, if there's not enough room, you're waiting for too much conviction like I normally would, on that turnaround. There's no money in it. There's no profit.
And that's been, I don't know if I should say this, but that's been like your biggest growth from a trading standpoint this year is because of how fluid you've been. You've been faster than you ever have. You've been more aggressive than you ever have as well. And I got to be honest, I love seeing that out of you. And you know it, because that's my style, right? But I love seeing that out of you because I feel like you, at least when we first met, you were more longer term, but your winners were like insane, right? Because you would hold off in 3,000, 5,000. I'm not joking. I mean, Howard was nuts. Of course, in the bull market, understandable, but
it was easy to do.
Well, but he was also picking the right projects at the right moment, and then just like, maybe you should take some profits, Charlie. I'm like, okay. I didn't really know much. I didn't know anything about these projects until he drops the science. Now it's a lot different. Your market has obviously adjusted, has changed dramatically, just like ours. And what I'm really proud, to say, is that I've seen you not only adjust very quickly, but get ahead of the game. And you've been very fluid, and your timing's been solid. So let's go, man.
Thank you, buddy.
Let's see how this changes for the long run. And guys, we talk about Jerome Powell for the stock markets, but what about SBF here, huh? A lot of news, man.
Yeah. Our boy Sam Bankman-Fried getting into fights with all of the cryptoverse. Without a doubt, sending my hometown, Washington, D.C. into a little bit of a frenzy.
I mean, that's his money.
Yeah. Well, I mean, I think, I've talked about it a lot. As you know, I am not a huge Sam Bankman-Fried fan. Mm-hmm. And part of that is that I don't feel he's a crypto guy. I think he is a...
Well, you've long stated that.
Yeah, he's a financial guy. He came from, Jane Street. He came from that world of quant trading. He just was able to see a friction and some arbitrage opportunities that no one else saw and just jumped on them. Keep in mind, they only
But that's what it is. That's what high frequency trading is.
And he saw the ability. I mean, basically, this guy made billions and billions of dollars buying Bitcoin in the U.S. and selling it in Japan.
Yeah.
And doing it just over and over and
he
over.
He wasn't the only one, by the way, but he was the one that was able to
he
capitalize.
Did it the most. He did it the most. I mean, he is arguably the second richest man in crypto after CZ, which is Binance, and Binance had been around since 2014. Alameda came into existence in 2020. So think about that for a second.
Wow. That's
2 years.
Catching up
in 2 years, this guy, just absolutely. I mean, they talk about it. They trade like $1 billion a day back and forth. I mean, we only trade $100 billion in total. He's 1% of the trading.
He is the liquidity in essence.
He really is, and that's why Citadel's coming. That's why BlackRock's coming. That's why Virtue's coming. Right. That's why.
But again, he's in that bloodline. He actually could speak their language.
Yeah. So Sam Bankman-Fried, he's made it clear he wanted to buy Goldman Sachs or J.P. Morgan.
He wanted to buy Goldman Sachs,
I mean,
bro.
you know, he's like, and what he's done is he's already bought, and he's already, you know, FTX already started trading at NASDAQ stocks.
Yeah, we saw that. We went through that.
As a broker-dealer. And he's bought CFTC-approved futures companies. So what he wants to do is he wants to build FTX out to the place that you buy crypto, you buy your stock, you do your DeFi, you put your bank account there. You know, he sees himself, and I think it's going to be a race. I think it's going to be interesting. Here's my question for you: who wins the race? Sam Bankman-Fried and the omnipotent, you know, FTX as a platform, or Elon Musk and Twitter as that answer? Because we've heard people talk about him trying to turn Twitter into what WeChat is in China.
Yeah.
I mean, you use it for everything in China. They order their food through it. They make their payments. It's everything.
It's kind of that one-stop shop. What was really surprising was Elon's disclosure about his longtime desire for a specific platform to be one and all.
Yeah.
And Twitter, he said, was a main priority because of the communication aspect, right? He is a true believer of free speech. You know, he believes that, you know, like his tweet, once it was official, says free the bird, right?
Right, yeah.
And so he's mentioned about subscriptions, and as a way to fight off bots, he's talked about bringing back Vine, which instantly would become a competitor to TikTok, Instagram, and Facebook, because I would venture to say that Elon and his team will be smart enough to kind of figure out how those algorithms work. And, and could super spice it in a way where it would be beneficial to him. And in turn, when we kind of prospectively look at this, Elon is, I feel, one of the smartest outside thinkers in this situation, right? I don't think SBF is an outside thinker. I just think he could see the edge that he has.
I think he plays chess when we play checkers a little bit.
Yeah, kind of.
You know?
And Elon,
he knows all the pieces. In other words, he knows, you know, he's got the inside sort of way that a Citadel worked.
Right.
That Jane Street
because he
worked.
came,
because he came from that world. You know, so I do think that
where Elon didn't.
Right. No, exactly. He was an outsider to that.
I mean, Elon was obviously smart, but what did it really kick off with? PayPal?
Yep.
Well, and then obviously Tesla almost went bankrupt, and then now it's America's most powerful car company, so to speak. But some people still consider it a tech company. I don't know what to think about it. They're almost like a manufacturing company, because at some point Tesla is going to outsource their batteries, and other companies are going to realize that it's probably cheaper to buy from Tesla. But we've already seen that kind of give and take, because GM's like, bye.
Yeah.
We're off Twitter now. We can't support that guy. We're not pulling our ads. We're not going to give that guy our money.
More money, right?
Yeah, no, our money, you know, it doesn't make any sense. We're not going to support him. So I'll say this. If Elon ever gets to a point where he truly revolutionizes the battery, I don't know how to say it right to make it powerful, but the battery is one of those daily inventions in our lives that are so important in our everyday lives that has yet to see that leap in advancement.
Right. It doesn't have Moore's law yet.
Yeah. And so when that leap of advancement happens, when that change, that progression, whoever does it, they're going to be insanely rich.
Absolutely.
Right?
And it's going to be so transformative to so many people across the globe.
Yeah.
Because that's the weak point within the whole discussion when it comes to energy.
Yeah.
Is that we need batteries. If you're going to store energy from the sun, we have to store it.
Somewhere.
It's not there all
yeah.
the time. You can't count on it.
Right.
You know, solar, wind, whatever that is, you know, even hydro to a point, you know, you've got to be able to hold that power in these batteries, and that's going to be the generational or technological change that, you know, liberates so many different things.
Dude, Elon Musk for the Fed. Calling it. He could use a third job.
Fire the Fed. I've made it very clear.
Where's our t-shirts,
Bitcoin
man? Where's our
fixes
t-shirt?
this. Bitcoin fixes this.
I want that to be our t-shirt, by the way. We'll see if we get the approval. Guys, we're going to finish off with this. I just want to kindly remind you that this is not just the cool title of our show, but this is something as an investor, both in the crypto world and the equity world, that we should be considering here. So I'm not so sure about BTC. I'm going to leave that to the actual expert in Legend itself, but I do feel that the equity market may not have seen the bottom, but we're getting pretty close. And the moment that the Fed truly does pivot, you're going to realize that this decision that you made in the near term is going to be the smarter decision that you've made. Think about it like this, right? We've talked about it. How many times have we said in our lifetime, if we look at our portfolios, just maybe a cash count portfolio, I wish I would have bought Meta at this time, or I wish I would have bought Amazon at this time. Man, I remember I had Apple at this price, or I had Baba at this price. And again, Microsoft's still a little expensive, but AMD and Nvidia is in that range. How many times have you said that in your lifetime when looking at stocks? And, it's that weird human psychology where people only want to buy when prices are going up and are never interested in buying when stocks are trading at a premium discount. And, I'm not saying that everybody likes a sale. Some people like to pay full price for clothes and jewelry and stuff, but it's very rare you go into a dealership and be like, I'm going to pay more than what you asked for. More than anything, people like to haggle. When you buy your home and it's listed at, I don't know, $780,000, you're not going to walk in and be like, here's $900,000. And the lowest bid was below market. You're not going to just overshoot like that. Why would you do that? I mean, maybe if you have the money, good for you. But the rest of us don't really have that kind of money. Most of the times we'd be like 750, maybe 700. Would you be interested in 700? Everybody's looking for that little haircut. You got that major haircut for these equities. We are thinking now too much in this small circle instead of looking at the bigger picture where the borders are like this. Don't look at the art through this piece. Step back here, right? Look at that beautiful picture and soak it all in. And if you could think and be forward thinking like that, folks, we know that this is a great time for your market and our market. And as scary as it is, I'm not asking you folks to dump your life savings. I'm not asking you to go anywhere beyond your means. But you should at least, in the very least, consider maybe it's time to take a little bit of a nibble. Usually fish, they'll nibble at the bait a few times.
Absolutely.
Maybe they get hooked, We'll have to wait and see.
I agree with you 100%. I mean, I was looking at it, and we were talking with Charlie Lewis, the guy who does our foundation room. I chat with him a lot.
I love
and,
Charlie.
I was looking at Apple, Tesla, all the ones you're talking about that I wish I had bought when they were this cheap the first time.
Yeah.
I'm not going to miss out this time. Same thing with Bitcoin. Anytime under 20K, it's a value. I'm telling you that, And the other thing I would say, Charlie, is, again, being sort of newer to the stock and equity world, buy the underlying stock in this type of market.
Yeah.
Don't play the option.
No.
Own the stock.
Don't play options unless you understand what the hell you're doing.
Right. Well, and this is also, but so many retail traders would take what we just said and go long an option.
Zero DTE.
We're saying
it's got to go up tomorrow.
Yeah. No, we're saying buy some Apple stock, buy some Tesla stock. Nibble away.
Well, we're not. Okay, hold on. We're not telling you to do that. We're just saying you may want to have to consider that, okay? So you look at it 5 years down the road, you're like, thank you very much. Listen, guys and gals, don't overthink it, okay? So now as we wrap this up, Howard, is there anything else you want to talk about here?
No, have a fantastic day, everybody. Have a fantastic week. Charlie dropped some serious knowledge on you today. And hopefully Jerome Powell won't mess with us too much longer.
Yeah, listen, I'm not saying I'm checked out, but after tomorrow, I'm going to be on a plane going to Georgia. We're playing the Frog, playing Cobblestone, we're playing the Reunion, Chateau Elan. I'm going to come back with my back hurt, and then I got a lot of work to do, but we're going to be back at it next Wednesday. Guys and gals, if you liked what you heard on this podcast, do us a favor, like, comment, subscribe. Again, the comments we are looking for is there a certain topic? Do you want us to break down charts? Do you want us to actually talk about what we actually are seeing and why we see it that way? Let us know. But more importantly, hopefully you like this information. Infotainment, as we say. If you want to follow us on our socials, Howard, what's your social?
Crypto Hondo on Twitter.
The Secular Trend. It'll be down in the description below. Ladies and gentlemen, we bid you adieu. Peace and love. Dips to rips, buy 'em up.
This has been Dips to Rips with Howard Greenberg and Charlie Moon, brought to you by Prosper Trading Academy. Visit us at prospertrading.com to find out more. This podcast should not be considered professional, financial, and/or investment advice. By accessing this podcast, you acknowledge that Prosper Trading Academy LLC, PTA, makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information and opinions presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. PTA does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the PTA. PTA assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials of the third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein. Moreover, PTA makes no warranty that this podcast or server that it makes it available is free of viruses, worms, or other elements of codes that manifest contaminating or destructive properties. PTA expressly disclaims any and all liability or responsibility for any direct, indirect, incidental, special, consequential, or other damages arising out of any individual's use of, reference to, reliance on, or inability to use this podcast or the information presented in this podcast.